Hello everyone, Serenity here. I want to welcome you to Down Home Crypto. Now today I've got a project to share with you that's doing some very unique things within the DeFi space. First thing that jumped out to me is they're going to be paying their rewards out in a token that's backed and pegged by gold, then by silver, followed with diamonds. So this is a passive income play that I can earn these commodities through just investing in a protocol. So pretty exciting stuff for me. But first, if you would, please do me a huge favor. Take a moment, like this video, subscribe to the channel, and click that bell notification so every time I upload a new video. Some of this information can be time sensitive. Most importantly, as always, please go out, talk to a friend, a coworker, a family member. Let them know this world exists, and they don't have to be rich or college educated or tech savvy. They simply need desire to change their life and a courage to follow that dream. And they too can join us on this great crypto adventure. So without further ado, let's go learn about collective finance. Now, before we begin, a couple things I want to cover. First of all, this is a sponsored video, but as always, I'm going to give you my honest opinion, what my thoughts are and what my concerns are. And I'm going to share those with you, and we're going to dive into this. Second of all, I'm always looking for the answer to those three questions: the what, the who, and the why. What is this project bringing to the table that the world can utilize? Who are the people behind it, and can we trust them? And three, is this a project that's right for me, and is this a project that's right for you? So we're going to try to get the answers to those as we dive through the white paper, as we go through all this information. So stay tuned and we're going to get all those answers for you. So you know me, the first place I'm always going is straight for the meat. And the best place to start is the white paper and documentation. Now I'll put links in the description down below to all these documents and all these references so you can follow along and do your own due diligence, because I never want you to take my advice or anybody else's. Only you know your situation and only you can make the right choice for you. But let's get into this and find out what collective finance has to offer. So it says, welcome. Collective Finance is a decentralized finance project on the Binance Smart Chain that aims to provide its participants with a secure way to earn consistent multi-layered yield while at the same time getting exposure to digitalized commodity representations. And it says, in regular TradeFi, participants can hold and gain exposure to gold, silver, oil, etc., but there are little to no means to generate additional passive revenue from those assets. Collective Finance is here to deliver on that front by launching the C tokens. These tokens represent tradable, asset-backed, over-collateralized commodity representations that have direct yield earning potential. Now, if you're like me, that probably seemed like a mouthful to begin with, and it left me kind of scratching my head a little bit. Hey, I don't get it. How's this work? That's okay. I'm going to break this down for you, but what I really found in all my hours of digging and research is I had to back up and look at this as one big machine. If I tried to look at it as one little piece like we would many DeFi projects, it didn't make a lot of sense. We really have to look at this as a whole, because that's what this is. This is an economy that all these moving pieces within that machine are going to generate revenue, and how that's distributed and paid to the holders is really exciting and unique. So let's get into this, and the first thing I want to talk about is the tokens, okay? Because those are very critical to understand how does this machine operate. Now, before we go too deep into the protocol, I want to make sure we understand the tokens we're going to be utilizing. Now, this was originally going to be set with BUSD, but given the latest news information, they've changed BUSD to USDC. So the four primary coins we're going to be utilizing are USDC on the Binance Smart Chain, Wrapped BTC on the Binance Smart Chain, the CLF token, and then the C token. So a CLF token is essentially the workhorse of the protocol. And it says right here, the CLF token is the native token of collective finance and is used to earn yield through liquidity provision and participation in governance. By holding and locking CLF tokens in the liquidity pool positions, participants can earn steady and recurrent yield and rewards, as well as fractionalized rights to the earnings of the vault, the treasury, and the portfolio. So the CLF is really the workhorse, and we'll break that down a little bit later. The C token, now that's the commodity token, or essentially the gold token, the silver token, the diamond token. And it says our C tokens are asset-backed tokens that represent real-world assets such as gold and diamonds, and are pegged to the price of these assets. They are also over-collateralized, meaning they are backed with a higher value of asset than their market value. This provides a layer of security and stability for X token holders. So what does that mean exactly? Well, let's go break it down so we can understand just a little bit deeper what's going on with tokens. So on this chart, it shows that 1 PAX G is equal to 1 troy ounce of gold, or 1 troy ounce is equal to 31 grams of gold. Okay, very important numbers to understand. And the PAX-G is going to be held on a Gnosis safe on the Ethereum blockchain. The direct correlation is for every 1 PAX-G in the Gnosis safe, there will be 28 G gold tokens generated on the Binance Smart Chain. Now, as we know, 31 grams does not equal 28 tokens, right? You would think 31 grams is 31 tokens. No, this is how the over-collateralized will be, is there will always be more PAX-G tokens on the Ethereum blockchain than there are G gold tokens generated on the Binance blockchain. So there will never run into a time in which there are more gold tokens than there is gold to back it. That's the over-collateralization, and I think it's a brilliant way to do it. It's very simple, it's very clean, and easy for all of us to know that, hey, it's done in the back end. It's part of the machinery. We don't have to worry about it. So now that we understand how it's going to become over-collateralized, how is it going to maintain that over-collateralization as the protocol progresses? Okay, this is something that is really neat behind the scenes as well. So we understand that there's a certain amount of PAX-G gold locked over in the Gnosis safe. We also know there's a little bit less of the G gold token than what there is PAX-G. So there's a gap. That's your over-collateralization there. Now, what happens is when there's a request made to liquidate the holdings of the C gold token here, then that request goes over to the PAX-G, some of that is sold, the C gold is burnt, and that revenue is passed over to the Binance chain side. So there will always be this over-collateralization. At no point in time can the C gold token exceed the value of what's locked in the PAX-G Gnosis safe. So please understand that over-collateralization there is to protect us for any weird spikes, anything may happen, but know that those C gold tokens will absolutely always be over-collateralized based on physical assets locked in the Gnosis safe. So for me, that was something that was really important because I've seen too many tokens say, oh yeah, but it's backed by this. Well, its backing crashed, or they printed too many of them, or they did something absolutely crazy. So the collective finance team, I think, has really done something unique and special here by making sure that their C gold token is always over-collateralized by the physical asset of gold. You're never going to run into the point in time where that C gold token, its value drops to nothing. Now, the next token we're going to talk about is the CLF token. This is essentially the workhorse token, okay? What do I mean by that? Well, I want you to do me a favor. I want you to imagine an old style power plant that had like a water wheel and water flowed across it, turned the wheel, which turned the shaft, which generated electricity, which ran the lights and everything in your home, okay? That's how it used to work many years ago. Imagine what that would do if you didn't have the water to go across the water wheel. The CLF token is essentially the water for that water wheel. None of the machinery, none of the electrical could work without that CLF token flowing through. That's essentially what it's going to do. Some people call it the gas to make the car move. Some people call it the oil to lube up the machinery and make everything turn correctly. I think of it like a water wheel. It's got to have that flow to make everything operate. But what are we going to do with that CLF token and how's it going to work? Well, let's read what it says here on the overview. It says the CLF token is the key to opening up the ecosystem for participants to gain access to all the features and utilities of the protocol, including fractionalized revenue shares, rewards, and governance of collective finance. The token is hosted on the Binance Smart Chain and will be a liquid token paired against BUSD on Veretek DEX. Now, a special correction here. Given the situation that's been happening with BUSD this week, they've decided to change it to be paired with wrapped BTC. So it will be the CLF paired with a wrapped BTC, okay? Special correction here, hasn't hit the white paper yet, but I did get it from the founders directly. So know that that's what's coming. Now it says CLF will have a fixed linear supply over a 3-year period as per the emission cycle outlined below. Participants of the protocol will be able to acquire CLF tokens through purchase or reward and form CLF WBTC liquidity, which can then be staked on the DEX to earn dual reward emissions in the form of CLF and DEX reward token. Now, on the CLF, once it's staked, the receipt token from this staked portion can be further lock staked for varying timeframes and rewards within the collective finance ecosystem, allowing the participants to earn their share in weekly and quarterly reward distributions of WBTC, CLF, and C gold tokens. The CLF token will offer participants an opportunity to earn ongoing, consistent, multi-layered yield rewards while increasing their protocol positions. So this is kind of where I say it probably doesn't make a lot of sense at this point in time. We really have to sit back and look at the entire machinery and how it operates to truly comprehend how the CLF is going to flow through and generate those revenues. Now, before we can go down this river of revenue, we need to know how to get to the water, right? Okay, it's actually really, really simple. So like it shows here, the first thing you're going to do is purchase the CLF token, okay? Then you're going to pair that with WBTC and generate liquidity. Now, once you have that liquidity token, and you're going to lock stake what they call the XCLF liquidity token. And that's what's going to earn you your rewards of CLF, WBTC, and C-Gold tokens, okay? So generate liquidity, lock up that liquidity, and in that process, that's where that liquidity gets passed down the different revenue streams to generate the rewards, which are then paid out to you within the Dapp of collective finance. Now let's dive deeper and let's go take a look at the timeframes we're looking at locking these liquidity tokens up for. So the timeframes are 30 days, which generates 15% return off of the revenue streams. 60 days generates 20%, and 90 days generates 27.5%. 180 days generates 37.5%. Now, one thing I want to make very, very clear that I was a little confused with to begin with is, let's say I have $100 value worth of liquidity and I lock it up for 30 days. Okay, at a quick glance, we would think that after 30 days, we would have 15% return or $115, right? No, that's not how this works. So how this is going to work is through the different revenue streams that are generating the revenue, all the rewards from there are distributed back to the holders depending on their time frame. So of those revenues generated, 15% of those go to the 30-day lock people. 20% of those rewards are distributed to the 60-day lock. 27.5% of those rewards are distributed to the 90-day lock, and 37.5% are distributed to the 180-day lock. So please understand, it is not a direct percentage based on the amount you lock, but based on the revenue that's generated from the different revenue streams. Now, when we start talking about revenue streams, this is where I said we really need to take a step back and look at the ecosystem as a whole to understand how it's going to operate. Now, I love the term revenue stream because I think of water. And really, when I look at this, I see 4 distinct water wheels. So a single river splits apart 4 ways. At each junction, there's a water wheel, each one of those turning, generating revenue. But then that water comes back together with the revenues that are generated and distributed to the wallets. Okay, that's how I kind of see this when I stand back and look at it. Now, to get this process started, the first thing we need to do is get the CLF token and the WRAP BTC token, go to the Veretek DEX and lock them together as liquidity. Now, that's going to generate our XCLF token. Okay, we take that XCLF, then we're going to lock stake that for the time intervals over on the collective finance Dapp. And that's right here where we're talking the revenue stream begins. That revenue is then passed through the 3 different revenue streams and through the governance. So the first one is the vault, the next one is the treasury, and the last is the portfolio. Now, each one of those generates its own revenue independently of the other 2. That revenue is then distributed down here to the reward system on the Dapp. And at that point in time, we can choose to take our profits or turn around and reinvest and compound back at the beginning of the river and start this process again. So this is where I say it's really important to take a step back to understand it. But now what we want to do is dig into each one of these revenue streams and find out how do they work. Now, the first stop on our river tour of rewards is the vault. And it says the vault is a multi-level yield earned asset. However, it functions in a very unique capacity. The vault will hold a portfolio of asset-backed tokenized commodity representations such as gold, silver, and diamonds, which will then be used for liquidity provision. This means these assets can then be freely traded and staked to earn yield. Well-guided participants of the project who choose to lock and create the XCLF token will be entitled to a fractionalized share of the vault's earnings. So this is talking about taking the C-Gold token and the C-Silver token and the C-Diamond token, making a liquidity pool and letting those be traded. And every time they're traded, there's a fee generated. It says 1 to 5% will go to the NFT holders. 15% goes to the Treasury. 25 to 30% will be used to reinvest and increase the vault's C token liquidity position. And 50% will go to the XCLF participants who are in the locked staked portion of the protocol. So this is just one of those water wheels we're talking about that's going to build revenue. But now it also talks about down below the governance, and it says quarterly rewards distributed. Like the portfolio holdings, there will be a governance vote on a quarterly basis by the XCLF holders that will determine what portion of the portfolio and vault holdings will be liquidated to provide a bonus reward to the XCLF holders. Again, as with the portfolio holdings, this governance vote will allow 10 to 20% of total vault growth over the last 3 months to be liquidated. Participants will be allowed to vote on how much out of the 10 to 20% should be sent out as rewards to the 90 and 180 day tiers only. For example, the vault grows by $25,000 during the last 3 months, and the XCLF holders decide to liquidate 20% of the earnings back to the holders. This means that 5,000 worth of C tokens will be taken from the vault and sent out to the XCLF holders based on their lockup time. So by being lock-staked, you get the power to help drive this boat and decide which direction this protocol is going. Does it all come out in returns? Does it get reinvested and pushed forward for a longer journey? We get to be a part of that. And I think this is one of the really exciting parts people miss out on is I think the community has to have more say in how a protocol is run. And I think the collective finance team has done a great job of giving us good, proper representation within our own protocol and with our own funds. Now, the next stop on the river of revenue is the Treasury, or essentially the bank. Now, this is really special and interesting, and it's all thanks to the partnership with Veretek DEX, because this is going to generate a protocol-owned liquidity. What is it? Let's go find out. So the Treasury is the second key component in the collective finance ecosystem and is from where the protocol-owned liquidity will be distributed. At launch, a portion of the POL will be locked on the collective finance platform across different timeframes. 25 to 30% of the rewards earned will be used to increase the POL position, thus ensuring its growth as well as continued lock stake. This lock stake and reward return will ensure that the Treasury's POL position continues to grow organically and consistently over time. The remainder of yield earned from the POL position will be returned to the Treasury to be used in various ways, including rewards, marketing, burning, etc. A portion of the POL position will not be locked, but will be used in Protocol's novel token rebate program. The program will offer CLF holders an alternative option that will help increase their rewards and yield while avoiding market selling of CLF. This program is also designed to provide an additional CLF use case and help participants avoid sell tax and price impact. Please note, the XCLF rebate program is currently in development and may not be available immediately upon launch. So don't look for this rebate program the day it launches, but know that it's in the works, it's been hammered out, and it's going to be coming very shortly after that. Now, out of the Treasury, it says the Treasury will serve to provide general fiduciary duties to the protocol, including, but not limited to, operating costs, salaries, marketing and promotions, and strategic reserves. Now, the yield that is earned from the Treasury will be distributed 1 to 5% to NFT holders, 15% will be directed towards the Treasury, 25 to 30% will be reinvested in the portfolio to continue its ongoing growth, and 50% will be distributed as rewards to lock stake protocol participants. So I think it's really great that each of these water wheels is generating revenue for us participants within the protocol, but also they're utilized to support and bolster up each other water wheel. So literally each one is building itself plus its neighbors as well as all of us. So it's a pretty neat concept and very unique to take all these pieces into one single protocol. So by now you're probably saying, hey, this sounds great, except for the only revenue streams I see are within the ecosystem. For any good project to grow and evolve, they've got to have external revenue sources, right? Well, third and final stop of the river of revenue is the portfolio. Let's go see what it says. It says the portfolio is the third and final key component in the collective finance ecosystem and will be mostly focused on DCI's proprietary and custom trading bot system, though there will be many more yield-bearing strategies to come. Under DCI direction and guidance, these trading bot system has been tested and proven to deliver some of the best and safest rewards possible. We believe that through partnering with DCI and gaining access to the proprietary system, the portfolio has the potential to prove significant yield and thus rewards for XCLF. In the near future, participants and others who are curious about the performance of the portfolio will be able to track and monitor its proficiency at any time through the CLF dashboard. During the beginning stages, we will provide updates on bots' performance weekly to our community. Over time, the portfolio's holdings will be further diversified into some of the areas below. This process will not only come under guidance of the core team, but also the Angels table and the XCLF governance. Once again, we get to represent, we get to vote, and we get to help choose the path this protocol takes. That's something really special to me. And it says additional portfolio revenue streams may include, but are not limited to, liquidity mining and yield farming, liquid staking, and select NFT and altcoin holdings. So it's great to see that there's going to be exterior revenue generated outside of the ecosystem, because as we all know through projects we've been in, you've got to have exterior revenue sources. Otherwise, a protocol just cannot survive within its own isolated ecosystem. Now, the rewards for this are going to be generated as 1 to 5% for NFT holders, 15% will be directed towards the Treasury, 25 to 30% reinvested in portfolio to continue its ongoing growth, 50% distributed as rewards to lock-stake protocol participants. Now, this is one of those, again, where the Treasury and the portfolio are bolstering each other up, and this is where it's going to continue to build all as one together. And that's a great aspect that I really thought was unique within this protocol. Now it says, initially the focus will be to grow the portfolio sustainably by allowing the compounding of rewards. Therefore, XCLF participants will be able to vote to change the percentage sent out as rewards. All collective finance users who choose to lock and create XCLF will be entitled to a fractionalized share of the portfolio's earnings. So for me, this was really the crown jewel in the protocol, because I feel that utilizing that exterior revenue source coming into the protocol is great. One revenue stream bolstering the other revenue streams is awesome. And on top of it all, once again, we as participants get governance and we get to vote and decide how this is going to be utilized. So all the way around, I saved the best for last, because to me, this was the most exciting part of the entire protocol to show what it can really do. Now, through all these different revenue streams, we see that each one has its own revenue. They're independent of each other, but yet they bolster and assist each other in their growth. So, very unique concepts going here. Now, when we go to the tokenomics section, the C gold token is not listed here because we've already covered that. It's over-collateralized by the commodity of gold. So the only token we're going to find in tokenomics is the CLF token. And it says the pre-sale price is 70 cents. The launch price is 77 cents. There is a max supply of 10 million tokens. So this is a deflationary token. Now, the allocation for that is in the seed round is 5%. The team will get 9%, which is 3% initial allowance and 6% vested over 3 years. That always makes me feel good to see a good chunk of that locked in for a long time frame. 10% will go to the Treasury Reserve, 13% for the pre-sale, 13% will be the initial liquidity, and 50% will be locked stake rewards over 3 years. As you can see, this is a 3-year roadmap, which is great. I love to see long time frames whenever I'm looking at tokenomics models. Now, when we go down and look at the taxes, there is a 5% buy tax, and there is a 5% sale tax. But tax distribution is 50% of all taxes collected will be sent to the Treasury, and the other 50% will be burnt. So, a deflationary reward token. Very exciting stuff here in my opinion, and this is one thing I like to see. Now, the next part I want to talk about really talks about life in general. As we know, we all have emergencies. Things go wrong. I mean, that's just what life is. But this protocol actually has a way, in case something does happen, we can pull out. Now, there are some seriously sized fees with it, and that's really to help avoid people from gaming the system. It's not that they're uncompassionate, just the opposite. It's the fact that they realize that, hey, things can happen, and sometimes people do have to get whatever they can as fast as they can for some emergency situation. So this is called an emergency exit, and this is a one-time option for participants to exit early from their locked XCLF position. Now, please note, this is only for the 60, 90, and 180-day lockup period. This is not relevant for the 30-day lockup, okay? So just make sure that's clear. And it says the emergency exit program offers participants a one-time per wallet option for an early exit from their locked XCLF position. If a participant is in a situation where they feel they must exit the lockup before its completion, they can do so by contacting the core team. The team will then proceed to make the required emergency exit arrangements on an individual basis. For every exit, participants will pay a tax in XCLF based on how early they exit. So they base this depending on how early you're getting out of it after your initial lockup. So if you're in the 31 to 60-day time frame, you're going to pay a 70% tax. If you're in the 61 to 90% time frame, you're going to pay a 60% tax. And if you're in the 91 to 180-day time frame, you're in a 50% tax. So this is one of those things that none of us want to use, but you know what? It's great to know it's there in case we have to. So to wrap up question one, the last thing I want to look at is the roadmap. I think it's really important to understand Where is the protocol going? How is the team progressing on their vision? And is it in a logical business-like manner, or is it kind of hodgepodge and thrown together? So right now we're in phase 1 of this roadmap, which is the startup phase. This is also where the angel investors are getting in, and they're getting in at an amazing discount. But being an angel investor is a pretty good sized investment. And we'll tell you about that when we hit question 3. Right now it says startup is angel and VC capital raise and initiation of the angels table. Creation and development of initial on-chain portfolio. Execution of PAX-G and genesis of CGLD token. Code development. Landing page beta Dapp. KYC and audit. Open social media accounts and Discord. And initial marketing and advertising campaign. So that's the elements that are going into phase 1 right now. And like I said, we are still in phase 1. But some of this has already been completed, but we'll cover that here in just a second. So phase 2 is going to be the pre-launch. That's where you're going to have the pre-sale round, which will be discounted, capital additions to portfolio and the CGLD holdings, and expanded marketing and advertising campaigns. Then phase 3 is when it's actually going to launch. And that's when your liquidity pools will show up on the Veretek DEX. That's when we'll go live with participants and the Dapp and all of those aspects. Now phase 4 is the growth and development phase, which is where they're going to bring on the silver coin and the diamond coin. And they're going to increase the commodity options available, and who knows where it could end. But they've got a very long roadmap and a very solid business plan listed out here. So I think that pretty thoroughly covers question 1. Now, I got to tell you, so far in my opinion, I like the way this protocol is going after things. They're not going out trying to reinvent the wheel and create the safes with the gold in it, things like that. That work has already been done. But they're building upon that work, just like other F factors within the protocol is based off previous projects, little bits and pieces here and here, and put these together into one master machinery. And it's not just one revenue stream, it's multiples. So I like the fact that they're not reinventing it, that they're taking all the best parts, putting them together in one with multiple revenue stream generations, and creating a whole new aspect for a long-term play. Now, if you are one that wants to get in 10x in a week or two and then pull out, this is not the project for you. This is not a quick play project. This is a long-term project that has potential for amazing returns, in my opinion. But as always, do not take my opinion, do not take anybody else's. I'll put a link in the description down below to all the papers, all the documentation. Do your own research because only you know your situation. But I think we got a solid grasp on the project. Now let's go dive into question 2. Who are these people and can we trust them? Now getting into a DeFi project is always risky, but knowing the team and realizing what their mindset is and what their background is can add a huge amount of safety and security within our world. So let's go meet the founding members of the team. So the first founder is Zom, or his real name is Zachary. His background includes entrepreneurial, stateside business owner, DeFi crypto investing, angel and seed investor, agriculture research, and renewable energy exploration. And I can tell you, I've talked to Zach, he's in the state right next to me, and I even got on Discord and saw some of the amazing pictures of the trucks he's built. So jump on Discord, get to meet Zach, and see some of those trucks because they are awesome looking. Now the next member is Chrome, or Jacob. His background is an entrepreneur, DeFi crypto investor, he's a trader, and a builder in the DeFi space. He's a DeFi project architect, management experience, and operations and commodity connoisseur. And he's in the time zone Pacific time, so he's west of me from here, so real close by. Now the next member of the team is Doc, or Brian. And yes, he really is a doctor. So he's got multinational business owners, he's a DeFi investor and angel investor, he's an entrepreneur with product development experience, and he's a physician and clinical scientist. This is not the kind of guy who just jumps into anything haphazardly. So I was really impressed talking to Doc, a great guy, very smart and very passionate about this project. And the last founder is NP, or Jules. He's an entrepreneur, he's a crypto trader, and a DeFi project development and execution, and a gunslinger. Now you may know Jules from Veretek DEX because he's a founding member over there as well. So this is great. We have such an amazing amount of experience and people that we can actually get a hold of and talk to. But have they been KYC'd? Are they somebody we can trust? Let's go check. So going to the link off the white paper takes us to the Assured DeFi space. Now this is a KYC company and their whole job is to KYC the founding members and make sure that the website's accurate, the contracts are accurate, all the information is accurate, and these are real people. And we can go down here and scroll and find out that yes. So we can see the controlling team members is GM Monkey, Zom, the Great Varney, and DeFi Jules. And just like we saw in the previous article, That's Chrome, that's Cryptzom, GoldDoc, and NP. Now I can tell you, I've talked to these guys for several hours. I got to know all about them, what they do in the real world, what they do in the DeFi world, what their experience level is. But you know what? My main goal is to make sure that you have that opportunity. So do me a favor. Tune in Friday, February 24th, where I'm going to have a live AMA with these gentlemen on camera so you can see their faces, you can ask them the hard questions, and you can decide for yourself, because I never want to make that decision for you. So show up and find out if this project is right for you. So now we've come to that critical juncture of question number 3. Is this project right for me? And is it right for you? Well, first of all, I can't speak for you. And second of all, never do what I say or what anybody else says. Do your own research, do your own due diligence, make sure you're comfortable with this project. And if you have any questions or concerns, jump in the Discord, talk to the team, get to find out exactly who they are and what they're about, because I think that is the most important thing. But for me personally, on my serenity scale, which is 0, I stay up at night panicked and worried and stressed, to 100, which is I sleep like a baby and never worry at all, I put this project about an 85. DeFi, of course, is risky. I think this is built as a solid business model. A few little things, I'm kind of curious how it's going to play out. But all in all, I think it's well planned, well strategized. Now the question is, how will it be executed? And that's always the big question. Now, right now, we're in the seed round. So the minimum entry point is $5,000. That's a pretty hefty sum for some, but there are some amazing perks to go with that. Now, if you've noticed, I didn't talk about the NFTs yet, because I wanted to save that for this point in time to really list out what they are, what the benefits are, and how to go about getting one. Now, we are in the angel seed round, which means it's a minimum entry of $5,000. Now, for some of us, that might be too steep. Not to worry, there is going to be a pre-sale round for a minimum of $1,000 where you can get the pre-sale NFT, and it'll have a ton of perks also. But right now, currently, we are in the angel NFT seed round. So it says the Angel Edition NFT will be extremely exclusive and will generate some of the best rewards out of all the different types of NFTs. To acquire an Angel NFT, you must enter the seed round with at least $5,000. For every $5,000 you spend, you will get one special edition Angel NFT. And I can tell you that these NFTs are tradable and they are sellable. So hold on to them because they are going to generate revenue over time. Let's go find out how. Now back on the white paper, under Angel Edition NFTs, it talks about the utility. It says 1% of all fees will be earned from the C token liquidity. Angel NFTs will earn fees from all future C tokens. That's the silver, that's the diamond, that's all of those. 2% CLF emissions over 3 years are split between all Angel NFTs. 50% tax reduction or exemption within the ecosystem. Now, this does not include the buy-sell tax or the emergency exit tax, so keep that in mind. And on top of that, there will be future utility attached to these NFTs. So this is one of those points in time that if you believe in the business model, if you believe where collective finance is going, getting in now and getting one of these Angel NFTs could be a huge return just within itself. As we bring this deep dive to a close, I really hope I've been able to answer all your questions and give you solid information. But please note, in the description below, I put links to all the documentation, the websites, and the Discord. So if you run across any questions you couldn't find the answers for, or just not sure, jump in Discord, talk to the team, they'll be happy to get you squared away. Now, the last and final piece is, I did not tell you how to get into this, because there is no direct Dapp, and also because I want to wait till the very end so you know exactly what you're getting into before you just jump in. So if collective finance is a protocol for you and it is something you want to participate in, jump in the Discord, talk to one of the founding team members, open a ticket, and they will get you squared away. They'll walk you through the process, they'll help you out, and that way you can get your Angel NFT. So as always, I want to thank you so very much for your time, and until next time, have a great night.